Welcome. I'm Ernie Goss, Professor of Economics and McAllister Chair here at Creighton University in beautiful downtown Omaha, Nebraska. I'm here to report on our business conditions. That's business conditions for the 9-state area, Mid-America region, stretching from North Dakota and Minnesota north, right down the middle of the country to Oklahoma and Arkansas in the south. Been doing this survey since many of my students were only a little glimmer in their parents' eyes. We've been doing it a while. And this is it's a survey of supply managers, and they're the canary in the coal mine. In other words, they see things not so good today. We'll see things not so good 3 to 6 months down the road. Okay, what did our survey for the month of October? Here we are on the first business day of the month, as we always are here. And of course, this is November the 2nd. What did the number look like for this month? Well, gosh, it's not good, not good. It's below growth neutral for the third straight month. Now don't jump off any ledges just yet. I mean, this is what happened is we oversample. We got heavy sample on manufacturing. Manufacturing in our survey and other surveys not good, and we're seeing it in our survey below growth neutral, pointing to slower growth, and in this case even negative growth for many of the states that we survey. So keep a watch, keep an eye out there. Everybody that says everything's just hunky-dory, I don't think things are hunky-dory. For example, North Dakota has the lowest unemployment rate in the nation. North Dakota's losing jobs. So don't just focus on the unemployment rate. Look at these other numbers. Look at employment growth. Look at these, what we call the PMIs, Purchasing Management Indices, and I'll talk about that again. It was below growth neutral for the third straight month. Overall index falls to 41.9, and that's from 47.7. And it's the lowest this is the lowest since March of 2009. Now, those who have been following or are students of the economy know that the recession, we were still in a recession in March 2009. The recession ended in June of 2009, according to the National Bureau of Economic Research. That date sees things. Employment rises slightly, still to a very weak 42.3 from 42.6. The manufacturing sector in the region shed about 14,000 jobs over the last year. So again, this manufacturing issue is showing up in our survey. Now what's going on? Why manufacturing? Because the strong dollar makes it more difficult to sell these U.S. goods abroad, so exports are coming down, anything connected to energy coming down. Likewise, farm economy, those manufacturers that serve the farm economy not doing as well. Now here I'm going to bring up and show you the indices. That's the U.S. and the Mid-America since June of 2014. And you see, don't need an economist to tell you that's the wrong direction. I mean, that's down. And here you see the U.S. is in red. Now the U.S. number for October will come out later on this morning. You see them in Creighton blue there, beautiful Creighton blue, down as well. The trend is not beautiful. The color is beautiful only. So you see that. Now, inflationary pressures, that's another thing we're keeping an eye on, and that's been down. And you say, well, I think that's good. I like lower prices. Well, the Federal Reserve, they don't like lower prices or disinflation, where the inflation rate's coming down, not deflation where you see prices coming down. We're seeing, I should say, the growth in prices is coming down, just the growth, not the actual prices. Export orders down to 38.1 from 42.4. What's happened there is the stronger dollar is making it more difficult to sell our manufactured goods abroad, and for that matter other services as well. But it's primarily manufacturing. So, and also the global economy. Ours is, as I've said here before, the healthiest horse and glue factory, and now we're getting less healthy as well. And so that's a real issue going forward. Now, what should you watch for next month, or at least, well, actually this month and into next month? Keep an eye on that employment report that comes out this Friday. That's November the 6th. That's for the month of October. Been down. It was down to about 130,000 jobs last month. If it comes down even more, say 100,000, that's a real problem, indicating this economy is dipping lower, and not a recession, of course, yet, but it's certainly not a real buoyant or strong economy. Keep an eye on the core CPI, the Consumer Price Index. It's now year-over-year growth of 1.3%. Again, you say, wow, that's pretty good. I I like lower prices, or at least lower growth in prices. The Federal Reserve doesn't like it. They want to see that number up to 2%. Now that's the core CPI, which strips out food and energy. So that's, again, I'd like to see it tick up to 1.5, 1.6, 1.7, up to the Fed's target. Also keep an eye on the PMIs. Those are the numbers I just showed you. And again, the national number comes out later this morning. I think there's a chance the national number will be like ours, below growth neutral. That's a real problem. What are the risks? In other words, what's going to tell me things are getting perhaps even worse than what Ernie Goss is telling you? And I don't mean to have depressed you. I mean, we economists are often referred to as the guy or gal who comes in and takes away the punch bowl in the middle of the party. I'm trying not to take away that punch bowl right now. But risk, the Fed statements, you say, well, I thought the Fed was there to help us. They are, but they're not helping us. Janet Yellen and company are making too many statements, leading to uncertainty. I'm not sure what's going on as they see it. In other words, they say, well, things are growing. Well, they're not. We're data-driven. I hope they're data-driven. What else would you be? Looking into a crystal ball? No, data. Look at the data. We know you're data-driven. But quit creating uncertainty by issuing statements that are inconsistent. Inconsistent statements, watch those. Disinflation, watch the 10-year Treasury. That wraps in inflation in there. When that yield starts coming down, that's the interest rate on the 10-year Treasury, it's around 2.1, 2.2. It comes down below that. Real warning right there, certainly a warning. So that'd be of disinflation. And finally, again, the Eurozone, Greece, my goodness, what's going on there? We're hearing Greece saying we're not going to abide by the the austerity measures of the EU, the European Central Bank and the IMF and others chiefly. We're not going to abide by those. And then you've got Portugal there. Portugal has some real issues there in terms of their debt versus their growth, their GDP. Too much debt, not enough growth in GDP, another big thing to keep an eye on over the next month. Well, that's it, folks. That was our report for the month of October. Not that good. I'm about to trim my GDP number, growth number, into negative territory. Not yet, though. I'm still on the borderline of saying just slower positive growth, but for the manufacturing sector, negative. Negative on the manufacturing sector. When does that spill over into the U.S.? The broader economy could be coming. We'll wait till next month, when first business day of next month. That would be the first business day of December. Until then, until that time, may your economic cup runneth over. Thank you.